And like conceptually, I would say yes. There's always a fine line between what is allowed, what is not allowed. Right at the end of the day, you have your legal tax strategies, right? Like tax 101, back to college, right? We learned there's tax avoidance and tax evasion, right? Tax avoidance is deploying legal loopholes to minimize your income and pay less taxes, and then you have tax evasion, right? So some things are defensible, but very often things are not defensible. And the things that we've seen, for example, right, if someone took your entire family 3 4 times on trips around the world, right, you can't really say, hey, this is a right, this is an appropriate business expense. um, if someone had a personal health crisis, and for whatever reason they paid it out of the business, that's not a legally justifiable business expense to reduce your income with. So going back, amending your return may be appropriate in such a case. Obviously everyone has to evaluate that together with their tax preparer. uh, but I rarely seen business owners go back and amend their returns, right? Because ultimately, it will mean that they're going to owe taxes. Plus, it kind of puts them on the IRS's radar as well when there's this drastic amendment filing, basically.
Yeah, well, it's a thing to where it's it's about risk, and it's the risk of when do you start thinking about that? Do you think about it, today, or you sell, 6 months from now? Well, that's not enough time to make sure that you've done it a certain way. Um, and so, how much is a buyer, from a buyer's perspective, are they going to argue about those things? Because the SBA, as I understand it, they're going to want to know, okay, hey, well, the trips around the world, that doesn't count, right? The buyer's not going to want that to count either. And so, how much is going to be how, I guess, maybe how thorough of a process is the seller going to have to undergo to prove that their financials are legit?
Absolutely. So, first of all, getting approved for an SBA loan is not in place of a buyer actually doing their own financial due diligence, right? So that's like number one. Everyone should be doing financial due diligence. Absolutely crucial, right? Now, just because things come up throughout the financial due diligence process that maybe the buyer could stomach, it doesn't mean that an SBA lender could stomach it, right? So you may have something that the buyer could wrap their head around, and I see this very frequently, where they take these trips around the world, for example, with their family. A buyer could say, "Hey, these are truly discretionary, and I'm comfortable with that aspect because they have been validated during due diligence." But going to an SBA lender, they're likely not going to add that back. And to the contrary, it kind of raises some red flags into the reliability and credibility of the returns and financials that the seller is presenting.